Looks like Wall Street's changing its tune on GE. The latest analyst to jump back onto the bandwagon, Barclays analyst Julian Mitchell, made his bull case on the halftime report earlier today.
I think that a dividend cut has been largely factored in by institutional investors. So I think if you saw a clearing of the decks on the dividend, we get a clearer path from a new CEO on the higher financial flexibility, what that dividend cash will be used for instead, which is likely a very aggressive power restructuring. I think people will like that message because they'll understand then why the earnings and free cash, looking out 2 years, should see a very sharp increase.
This as GE has made an electric comeback, soaring 20% so far in October, becoming the best performing stock in the S&P during that time, giving us a glimpse of its glory days back when, as you hear from the old commercial song, it was a shining light in the market. So does this finally mean the worst is over for GE? Shareholder Tim, what do you say?
Great tune. I mean, that's a great tune. Reminds me of better days. Look, I think for the company, look, Mr. Culp comes in. People think what he did at Danaher is something you could immediately carry out at GE. If you think that, no. Will he do more than Flannery was probably going to do? Yes. Will he increase revenues over the course of a couple of years because the power business probably is at the low ebb and because I think the energy business is on an upswing? Yes. Valuation-wise, if you want to do this metric, $1 2018 means you're at whatever, $13.5 times multiple. That's very cheap. Ultimately, though, this is about seeing visibility in cash flows. I think you stay long the stock.
Where do you go when we go over to that thing? What's that? The smart board?
It's the plasma.
The plasma.
It's just
like
plasma, like a plasma.
And we did a thing a couple weeks ago. The more you know. Remember that whole thing?
Referencing it, so how can I forget it?
Thank you, Mel. And we went and we said these are the 3 reasons maybe we have seen a bottom in GE. Viable. They're still in viable businesses.
Yes.
They've addressed some of their problems, and they addressed them now by getting a new CEO. By the way, we didn't know that at the time.
That's true.
And they had a huge volume day, so you maybe saw the capitulatory bottom on 140 million shares. We talked about it then. So although I don't think their problems are over by any stretch of the imagination, I think it can continue to rally into earnings on October 25th.
It's all about expectations, and this Barclays analyst is making the point that investors right now are prepared for an
There are no
EPS
expectations.
cut. They are prepared for a free cash flow cut. They are prepared for a dividend cut, and that's half the battle.
I think the history of distressed equities will tell you that those 4 words, dividend cut priced in, don't really play out the way that people who are hopeful about that do. I mean, they just don't, right? And so here's those 4.
Guy had a count on his hand.
I had a count on my hand. It's like,
would you do
anyway,
price
go ahead.
No, dividend, I got confused.
No, I'm just saying it doesn't usually work out that way, right?
But hasn't the expectation of a dividend cut already played itself out in terms of the shareholder base? In other words, I think you've actually seen a major rotation out of this stock by those that were expecting one thing or another. To me, I think it's clean slate time in GE's shareholder base, and that's what's very positive for the share price.
Well, while Wall Street analysts are getting bullish on GE, our very own chart master made the bold call to buy GE way back in April.
As, again, it's continued lower over the last several weeks and months, the actual internals have moved higher. I think I want to stick my neck out, take a gamble that this very important, now less important stock is maybe so bad it's good.
GE is up 4% since that call, and with the most recent rally, Carter says the lows are in for GE. So why don't you head over to the plasma?
Yeah.
Nice.
That's a pretty feeble,
Be careful,
4%. And it did make a new low. So, I mean, it just shows how treacherous it is, too. We have these adages, don't catch the falling knife value trap. And to some extent, that's the risk here. But it went further, and now there might just be the signs that it's reaching in. I want to pull in the all-data chart going back to the 1990s and then do a little bit of drawing. So what we have here is we have 3 distinct periods. Down 64%, down 86, down 66. And what's interesting is these are all exactly 4-year declines. And so this most recent one, it looks to me as though this is about where we get the setup for some sort of throwback. And that's the bet here. So let's drill down a little bit more and focus in on the most recent period. So here's our entire bull market since 2009, and obviously, while the stock market continues, GE slumps, and it slumps dramatically. Let's put in some lines here. Now, this is a little bit crowded, but these are all the declines that the stock has had And then the counter trend rally. So up 15, up 9, up 7, up 11, up 22, and then we're up 22 again. So the issue is this sequence over? We're about to make new lows. The gap that Guy was talking about is the key, and I think that's why the lows are in. And then finally, here is the here and now. Here's the April, so that wasn't so great, right? We made a new low, but we're back now to it, and we're a little above. But I think the key thing is this. Here is the downtrend, and what we know, and there's no way around this, is that this has failed, 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 and now we failed ever so slightly, but then we pushed through. And that then is the judgment, that this finally, the lows are set, upside unknown, possibly quite a bit, but it's more about are the lows in. I think that's the case.
So, Carter, you've been drawing lines on charts for a very long time, and a very long time for fast money in particular. I feel like you need a bottom line, like there needs to be a wedge sort of setup for it to throw up from that line. I don't understand what the upper price target would be from here.
Would be here. Well, that gets back to sort of the longer term chart. I mean, if you were to recover, again, some of these moves. So this is, again, some of these counter trend moves are fairly substantial, but the key is that this one is moving from a low, basically having held, and I think this one will be more outsized than the others, and that's the bet, that it's really first and foremost, has it set the low because of that heavy volume gap and that very record volume day, and that's the bet.
I think Carter should come back.
We got,
he's already sitting at the desk. It would be kind of awkward if he just stayed there the whole rest of the
Does he want to come back, though?
That's the question. Apparently he does. Apparently he does.
Yeah, he does. He's coming back.
What would you say? I mean, in terms of the options market, have you noticed activity that would indicate one way or another?
So really interesting today, the call volume was like 1.5 times that of puts, and a lot of it was in the weekly options. So traders have just become obsessed with this name because the momentum, that first gap, that first day when it gapped higher, it gave most of it back, right? But then some guys got in there and gals and said, you know what? I think Carter's right. I think the bottom's in, and they've been doing a lot of the weekly near the money calls and just kind of playing it for short-term moves.
This stock also falls that same phrase I've said many times about emerging markets or other bombed out stuff. You make the most money when things go from awful to just bad. And this stock's up 22% in just 2 weeks based upon a change in sentiment and not a whole lot left. As CEO, not insignificant. But I think there's, a lot of good news has already been priced in.
He's already been priced
Well, I just want to point out that, I mean, you've had a massive run in a stock that basically struggled to have this kind of move in a long time. It's not things that are suddenly better. It's that things weren't awful.
And by the way, there still has to be an earnings conference call, an investor update, right, with call to investors. We don't really know what the plans are, and has it been priced in? Has the worst been priced in?
No, I think there's still a chance. I think people are going to chase into earnings.
You think it makes a new low?
I think it potentially could make a new low at the back half. Well, we're in the back half, the early next year, let's just say. But in the meantime, into earnings on the 25th, I think there's an absolute chance this thing prints at least 15, which percentage-wise is still a significant move.